Yes, just watching the videos that you'll find in this YouTube channel is going to help you to become a better supply and demand trader. But to help take your trading to the next level, I've decided to create these two videos in this short video series of understanding how I trade the markets with a supply and demand concept. So what I'm actually going to share in this video today is we're going to revisit some of my trade reviews, so you will learn exactly how I place my trades from my entry to my stop loss and where my take profit levels are placed. Now, of course, you will also be able to see my trade management as I take those trades from the entry to the exit of that trade. So if you're looking forward to watching this video, don't forget to give me that thumbs up. It's going to help me to know that you're enjoying this type of content. And of course, if you're new to the channel today, then why not take the time to subscribe to the channel, and then once you've watched this video, head over and start watching those other videos on the channel to help you with your supply and demand trading journey. Now, this video is going to be a long video, so I do suggest taking the time to get your favorite beverage and sitting down and watching this video all the way through, because I'm going to assure you it's going to help you to really understand the way I trade with a supply and demand concept. Now, of course, everything you learn in this video and going through those trade reviews is exactly what I teach in my new upcoming course, which is the NFXT Forex Masterclass. And if you want to find out more on that course and when it's going to be coming out, then I will leave a link below in the description of this video so you can find out exactly when that course is going to be released. And of course, I will leave timestamped below in the description of this video each trade review, so you can go back and watch your favorite trade review once you've watched the entire video. So I'm going to hand you over now to myself so you can go through and watch the rest of this video. So we're over now on the pound US dollar. And what we're going to take a look at first, quickly and briefly, is higher time frames. Let's go to the monthly time frame. As you can see, let's just zoom in a bit. On the monthly time frame, when we're drawing pen, you can see we've come off this area of supply. So we are inside an area of monthly supply. So that means we want to be looking to sell this market. And even if we was to draw this area or even this area here, the downside as our areas of demand, we have room to fall down. So that is our areas on the monthly. That's going to go to the weekly time frame. Area on the weekly, we do have this as an area of demand. The market hasn't quite come into it. You could say if we was to draw it off the high of that candle, we have come into that area. But let's now have a look and see where our area of supply sits. And if we was to draw out this as our area of supply, you can see that we've come off an area of supply. So the higher time frames are showing us they are in control. So we are looking to sell this market. We now go to the daily time frame. Now the daily time frame, you're going to see that the market rallied up here, created some basing areas and rallied back up again. Now the last area of demand that I can draw on this chart, and let me draw an actual area. So we have this as our last area of demand. You can see the market has bounced off that area on two occasions. Now, since the market has rallied up quite strongly, where's that gone into? Well, that's going to go into this area here, which is the last area of supply that we can see on this market, what broke these lows and broke these lows. So this area of supply has now reacted as a sell zone. So let's now just look deeper into this. Where would be our ideal area to sell from? It's going to be that area of supply. So we're going to mark that off. I'm drawing it like this to mark off the last bullish candle, which is this one here. Now the market has come deep into that area of supply. Now what it's also done, if I draw out this line, these highs, it's also removed those highs right there. So we have a false breakout to the upside. That's showing me the manipulation in the market. Now we can see that the market has broken those highs. Let's now go down to the 4-hour time frame and have a quick look at this pair. So what do we see on the 4-hour? We can see that the market, and with my drawing tool, had this area of demand, and we see the large move to the upside into this area of supply. We can then draw out this as our area of supply on a 4-hour. So you can see the market has come straight up into that area of supply on top of another level. So this is where we're now going to look at our entry point. Now the target is obvious. I have already taken some off this trade just to take away my risk. So let's now go deeper into this area, why I've taken this entry. Now it's not a typical supply and demand entry. I've actually taken it off a single candlestick. Let's zoom in to that area. Now if you look closely, we did have, as we rallied up, we did have this last little area here of basing. The market's rallied up, moved sideways with one last push higher, and then the market's dropped down. So what that actually creates for me is a new area of supply here. So normally I'll be looking for the market to come back up into that area of supply to look for a sell to go down. Now this obviously didn't happen, and what I then saw, we'll just take everything off the chart, and what we then had was this drop, base, drop, base, drop. So that creates this area of supply. Now that's a fantastic area of supply to watch because the market dropped down, it came back inside with this candle. Now I call this more of an indecision candle. We moved sideways, and then this morning you can see we had this nice bearish candle. Once I saw that candle, I saw the reaction coming out of that supply. I saw that this candle was showing me that the bears were taking back control. Now, as well as that, if we mark out these areas here, it's manipulation, which I'll show you in a moment on a lower time frame. But on the close of that candle, I took a break of the low, stop of the high. I've already taken off this trade, some of this trade at the close of this bearish candle, and now I'm looking for the market to continue lower. Now my stop, I'm going to leave it where it is because I'm in a risk-free trade. So even if the market comes back and stops me out, I'm not going to lose anything on this trade. But that is the idea of the entry. Let me go down to the lower time frame. Let's go to the 1 hour. And you'll see on the 1 hour, we had these highs in the market. We then had a manipulation. We had this bullish candle followed through with this bearish. We then pulled back into this area of supply. Now I preferred to send this drop further away and removing these lows here. But if we look at that area, we did bounce off this area once again and rally back up. Now I wasn't taking this as an entry, but it did show me that the reversal happened with this bearish candle, and on the 4 hour time frame confirmed that. This is more of a price action signal entry with the engulfing of that candle and the reversal on that 4 hour. Just wanted to show you a different type of entry. You don't have to always go for those limit orders. Remember, when you're using supply and demand approach, it is best to look for those entries with a limit order to save you the hassle with that set and forget strategy entry. So what I'm going to do now, we're going to leave this trade where it is. We'll come back at a later point and just quickly update this video just to show you where this trade ends up. But for now, this video is just to teach you you can still use those candlesticks in your trading as well as with supply and demand. Remember, the candles on the chart are always going to show you where price is. And the reason I've got my target here is obviously because we have this area of demand. And what do we also have there? We have an engulfing candle structure. That is the ideal area. We also have another area below, which is even more ideal area because this is more of a swing pullback, and then we see the rally away. And that is where I like to see the market go into eventually. So we're going to stop the video now and we'll come back at a later point and we'll update this trade. So welcome back to the second part of this video. Went through in the first part the live trade entry on the pound US dollar 4 hour time frame. We're now going to go back over to those charts so I can show you exactly how this trade's ended up, and then we can talk about how you can look to trade the same way yourself. Let's go over to that pound US dollar. Now, as you can see on the chart, this was the area of demand that we were looking for the market to go into, and this was that area of supply where I took that price action entry coming off that 4 hour candlestick. Now the market, in fact, on the next 3 candles just dropped straight down into my area of demand. Now, why did this happen? Well, understanding space in the market will help you to understand why the market dropped. These 3 candlesticks here to the upside were bullish momentum to the upside, showing me that the market has got all this space to drop back down into that area of demand. And that's exactly what happened. The market dropped, moved sideways. We saw the reversal here on the lower time frames, went through in the first part of this video, and the market's dropped off. So that trade's just over 3-to-1 risk to reward, a great trade for the week on the pound US dollar. And we're going to go through this pair on the Euro Great British Pound, exactly why I've taken this trade, how I've caught this trade right here in the market on today's candle, and where we're looking for a target towards these previous lows. As well as where I'm looking to take profits off at these lows as well. So let's go through this pair. What are we seeing? Well, we're going to have to look back at a bigger view. Let's go to a weekly time frame. What are we seeing on a weekly time frame? Well, it's obvious that this pair is in a downwards trend. This is a large bullish candle to the upside, which can determine whether you're going to see a bounce off this area, because this could potentially be an area of demand, or we may just see it continue through, removing that and continuing lower. Now for me, I'm still looking to go short on this pair. If we go to a monthly time frame, we're very range bound on the monthly. You can see on the monthly chart, we've been going sideways. There's no real direction on this pair at the moment. So understanding where you are in each time frame, on the monthly we can see we are sideways. We go to a weekly time frame, we just change that. So go to a weekly time frame. Again, we have actually been going up. We've then been going sideways, and now we had a nice push lower, removing all these lows in the market. We could see this market head down to these lows, which is that outer boundary of that monthly time frame. So that is the weekly time frame. Understanding where there is an area of potential demand is where we see this push up. We do have an area of demand here where the market has come off and bounced. So I'm not sure if we're going to see this go all the way down. We just don't know, but it has bounced off that area of demand. And we did see a big reaction on this bullish candle. Now, taking that into consideration is an important thing, but I'm looking for a short-term trade, not a long-term trade. So let's go down to a daily time frame. Now, what are we seeing on a daily? We can see the market has been trending to downside. We made these last swings down and we had a big push up. Now when we saw this, it's left behind this area of demand where we could yet see the market pull back into for a bullish move higher. Now if I just go back, if I just go closer into price, we also have an area of imbalance, which would have sit right here. And you can see that we came into that area right on that pin bar, and then we start to move upwards. But look at the price action. Let me just take everything off the chart. Look at these candles here to the upside. Nice strong push up. Again, a nice strong push up. Now, wouldn't you expect this area here to remove those highs and continued going up like this? This hasn't happened, and what we've actually seen is the market has topped out at these highs, and we've got some equal highs forming. The market has been unable to break these areas here to the upside. We haven't broken out yet. This is still an area that I'm expecting price to go to, but first we can now have this area of imbalance left over inside this big bullish move to the upside. So this could be where I'm potentially looking for the market to come back into, removing this last low in the market, coming into this area here, to then perhaps look for a move higher back to these highs. So that's a long-term perspective on a daily time frame. Now if we look at the way the market is moving on a daily time frame, let's go close into price. What do we have here? We have a nice big bearish drop to the downside. That bearish drop broke this area of structure to downside. That is left behind this area of supply where the market has now come into and tested. Now what you need to focus on is the candles here. Look at the way we have one big push down. We then have the very choppy market going back up. How many candles is this? Well, we have from this high, we have 1, 2, 3, 4 candles to this low. On the pullback, we've got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 candles. Look how much longer it's taken for the market to pull back to that area of supply that I indicate here on the daily. Now I've drawn this area of supply in case you're wondering. As this is an indecision candle to me, I've drawn it from the wicks. And that's why we've come into that zone right there. Now once I've seen this bounce off here, this is where you have to understand the multiple time frames to use in your trading. If you haven't seen the videos on multiple time frames, I will leave a link above now so you can go through and watch the video on multiple time frames. Now looking at this, we have a lower high forming. Once I've seen this, this is where I'm going to go down to lower time frames to look for a reversal here. Now for this one, I went down to a 1 hour time frame first. Now look at the way the market rallied up. This is a strong push to the upside. Now if you are looking at other videos on YouTube, they may say to you, this is a break of structure. A perfect break of structure to the upside. We're looking for the market to come back to here for an area of demand to look for a buy to go long. Now perhaps that's what you were looking for and you've been stopped out. But now going through those higher time frames, hopefully you see that it's not the best area. And I want to show you where this reversal actually comes in. When we have this area here, we can see the market is holding price up. Look what happens. The market breaks through with a strong push to downside. So we had all this consolidation. We are moving lower, and then we have a final push up and a drop through. Let me just remove that and show you that once again. We have these lower highs forming all the way down here. And we have a final push up. This long wick to downside removed all these lows. That's taken out anybody who's bought here off this area of structure. They think the market's going to go back up here because this move to the upside. They remove the stops and boom, the market breaks the downside, removing this area of structure, leaving behind a perfect area here that you could have taken entry on. Now I didn't take this because I wasn't watching the markets at the beginning of the week. You can see we pulled back a perfect entry here. You stop at the high and you could have targeted these lows, which you would now have a nice risk to reward. It's as simple as that when it comes to supply and demand. Now my entry, I'm going to go through on a lower time frame, but as the market then decided to break this structure low with that candle, you can see it's a wick to downside and it's a bearish close. For me, that's a valid break. We're going to look into a lower time frame here now on a 5 minute time. I think it was a 15-minute time frame actually. Yeah, it's a 15-minute area where we see the market dropping down. So this is the break to downside. We then pull back. We create this high. We drop down. We then make another pullback. Now what that is doing, that pullback, it's coming back into this area here of supply on the lower time frame. We then drop off and we break these lows, which leaves me this area here of supply on the 15-minute. And that's exactly where I've caught my entry. You can see the market dropped down, pulled back and dropped off. Now, if you missed that entry there was even another entry you could have taken right there. As you see the market breaking what? It breaks the market structure, these lows right there, pulls back, tags it perfectly for an entry and drops the downside. Now that is how I look at trading my supply and demand trading. There is a lot more to it than just this I'm going through. But now I'm going to go through what I said to you at the beginning of this video. I was going to share with you a tip in this video how to identify when you're looking for a trade. And what that is, I'm going to remove the wicks off the candles quickly. So we go to properties and let's go to none. And you can see I've removed the wicks. Now for many, this I would have said would help you to understand and read price on the chart much easier. This is going to show you where we have that move. We have a rally, base, rally. We have a pullback, so another base, pullback, and a nice strong rally. So you can see where the market is moving. That's on a 4-hour time frame, but look to your left. What do we have here? A nice big drop to downside. That's where the momentum is currently, not to the upside. Because look at the market. Since this dropped down, we had a pullback, but we had a slow moving pullback. And that's where you've got to understand where the markets are moving. Now, when we come back to this area here, we're looking for that reversal. And as I said, if you go down to 1 hour time frame, you're going to see where price was being held up. Now, can you see this easier now without any wicks on those candlesticks? Look, we can see where the market has been held up perfectly now. You can see where the market was going lower as it was doing this. It then had a final push higher on that bullish candle, and then we dropped out. What did that leave behind? Let me just remove that, yep. And that left behind this bullish candle, this area here of supply. Now, obviously we mark up to wherever the wick is, but as you can see, the market came back and we know it tagged it on the previous part of the video was going through. This is going to help you read those markets a lot easier. It's going to help you with your trading emotions because you're taking the emotions more away. Now, if we go through to my actual entry, when we see the markets does drop down, we then drop down lower again. Now, this is easier for you to see because you can see the lows here has been broken. Now, obviously, we saw that with a wick on the lows, but we can see here with the candles with no wicks, it's a nice break of structure. Now we're going to go back to this area, and this is exactly how I found my trade today. By going back, having a look, I can see we had a pullback, we had a small basing area, we dropped, we pulled back, another base drop which removed this low. And that is what I saw. Now obviously when I went to putting the wicks on the candles, we can see that this retested this area, and this one here is what I call a fresh area of supply. Now you can see the market dropped away, pulled back, and again look at how long it took to drop down and how long it took to come back for the entry. Now this is showing you the time aspect and how long it's taking time. Understanding that the move here is down with momentum, and again here was a momentum move down, and here we had no momentum. So seeing this big drop is no surprise to me. It's just following the price on the chart. Understanding the way the markets move. We just scroll back. You can see here we had the first move sideways, momentum drop, pull back, came back to the supply. We dropped off again, another momentum move. They pull back slowly to this area of supply and a drop off. Now, if you're not sure why this area of supply was a good supply, go back to the previous part of this video, rewind this video, have a look with the wicks, and remember, and you'll see exactly what I said on that part, why this was a good zone. And this was an excellent area to take a trade from, and you can see it had been triggered and the market dropped off. Now, is an ideal place to take profits on this pair. We go to a 4 hour time frame. The ideal place to take some profits was these lows as the market falls, and even these lows here in the market. Understanding the market's got to break these lows to continue to go lower. So this was a first profit target for me today. I've taken some profit off this trade. In fact, I've taken a good lump off this trade, and now we can see the market continues to drop off. I'll be moving this trade right now in this video to break even to protect my account. I may look at taking some profit off at this low. Just depends how I see the market approaching it. If I start to see smaller and smaller candles, then I'm definitely going to take another good lump off this trade at this area. Remember, we need to be taking those partials as we're taking a trade. And then this is my final target based on that low where I believe the market will need to go to that low. If we go back now to the daily, and I'm just going to put the wicks back on again. Bear with me. And you can see how I've taken the wicks off. Whether you're using TradingView, I'm sure there's a function on there where you can just take them off anyway. And this low here in the market is where I want to see the market now go back and remove this low and then drop into what's left here, which is also that area of imbalance where we have this big push up. And this could very well be where we see a push away, pull back. It may not do this, but if it does, this is where I'll be looking for a buy to then go back to take these highs out, which yet have to be removed. Then we are seeing that swinging pattern on the daily or the weekly time frame of low, that high, and then it could be a new higher low. Remember, it's all about making sure you're protecting your account at all times and look to go with the momentum in the market. So if you take anything away from this video today, remember, momentum is key. It's going to show you which way those banks are trading the market. Yes, we had a momentum push up, but look at the momentum push down we've had. And then we have this slow pull back. Now hopefully we can see another momentum push down to remove these lows, and then another final push higher with that momentum. So we're going to go through a live trade I've taken, which is on the Euro Great British Pound. As you can see, we're on the 15-minute time frame. I'm heading down towards my first target, which is this low in the market. I'm also going to watch this low as well as price approaches it, but this is my main target I'm looking at. And you'll be able to see that with the wicks on the chart, which I'll go through in a moment. But the idea was to show you how you can understand the reversal in the market without the wicks. We can see we had a previous structure high, a low, we had a new high. Now normally I'll be looking for this structure break here to look for any sells based on that. But if you look at the way the market came down and it was being held up at this area of consolidation, and finally the market went up, retested that high, dropped through and broke that area structure. That is a minor structure break, but it was a good area for me to start looking for a trade. I will show you in a higher time frame why in a moment. This left me this area of supply. You can see it's a very small zone. In fact, let's just go through and measure that zone. So I've actually only got a 2.5 pip stop on this trade. Now, potentially the risk to reward, if I was to look at this area here where we've got our stop and our entry, our first target we're looking at a 8-to-1 risk to reward. A second target I'm looking at a 19-to-1 risk to reward, and if my third target was to hit, which is down below, you can see it's well over a 20-to-1. So potentially a good trade if we can see the continuation to the downside. So why was I looking for this trade here, and how did I get into this trade? Well, if I just place on the wicks once again, but you can see where the wick has just come in and tagged me perfectly to the pip off this area of supply. Now this is a good zone to trade from because this is the area we see the momentum push down, removing these lows. Now look how much easier it was for you to see this happening in real time without those wicks on the chart. Remember, the wicks on the chart are those manipulation areas, and this is the area where you can see the wick has gone into that area of supply and brought us into this trade. So if you look to this area I've targeted, we do have these wicks to the low as well. I want to see those lows removed now for the market to even go back up high if it is. So this is a good first target for me, and that would be a nice potential profit as you went through on that risk to reward earlier. So why did I take this trade? If we go up to the 4-hour time frame, you are going to see where the market, the first push down was here, a nice momentum push down. Then we had this push down. Now there was a sell that I caught from up here on the previous video you've seen, targeting these lows. I actually took some profit of these lows, and then it's come back and it's knocked me out at a break-even trade. But I still got a good profit out of the trade. I was looking for the market to continue lower, but what it's done, it's actually come back into this area of supply this time on the 4-hour time frame, and then it's here I've searched for my lower time frame entry. So again, I'm looking now for this market to continue down to these lows here, then these lows, and potentially these lows at the previous low in this market where we see this retracement coming back up. So what I'm going to do, I'm going to pause the video at this point and then come back, and then we'll go through exactly how this trade ends up so you can actually follow along where I'm taking those profits and how you can look at using this in your own trading. So this is just a brief update on this trade. I did say I was going to come back and show you as I was taking partials on this trade. This was my first profit target. As you can see, I've taken a third off this sell trade with a nice 9-to-1 profit at this area and moved that trade to break even. So I'm in a risk-free trade. I've taken some good profits off already. And I'm looking for the market then to come down to this next target. So I will come back and update the trade if it reaches that area, or if the market actually reverses and I get stopped out at break even. But so far, a nice 9-to-1 profit has been taken off this trade. Now in this next update, you're going to see that this trade has worked out fantastically well. After hitting that first profit target, we did have the market moving sideways, and eventually we can see it broke to the downside and came into my second profit target. So that is now been achieved. As you can see, I have taken another third partials off this trade, that next profit area. Let's have a look and see what that actual profit target was. Remember, this was the area of supply to this entry point, and you can see that we've got to this low here in the market. In fact, let me just double check that entry line. So we've got well over here, you can see we've got well over a 20-to-1 to this target. So we had that first target, which is basically a 9-to-1, and we've got this second target, which is now, I would say, it's about a 22-to-1 profit target, a 22-to-1 profit target on that second position. Now, as expected, I'm now seeing that reaction coming off this low in the market. It's an area where price was held up before, and we can see the bounce is now occurring. Now, we may well see a pullback to an area of supply right here, which looks like a good pullback to come back into for another sell to go down. And that would be looking for the market to head back into these previous lows here, where I'd like to see the market head back and removing these lows and heading down into this area here. There's an area of imbalance, and there's some previous areas of a daily and weekly area of demand. That is a fresh zone of demand. So hopefully I can see the market continue lower, hitting that final target, so I can come back and share with you that final target being hit and how well this trade has worked out. Now, hopefully you're enjoying this content so far. If you are, don't forget to give me that thumbs up. This is going to help me to know that you like these types of videos. So finally, we've hit this final target on this trade. This has been a superb trade that we've been going through in this video. You can see the final target has just hit my area of that final position. We'll go through this in a moment, exactly what that profit target achieves. If we have a look at where this profit target was coming in at these previous lows right here in the market, and even on the 1 hour time frame, we can see it this low here. So yes, this trade has worked out fantastically well, and just as we were expecting to see the market drop down all this past week. So let's have a look at exactly what this profit target was. If we mark off the area where we've taken this trade, we had a 9-to-1 at that first target. We worked out around about a 21-to-1 at this target. And it looks like from this move down, we're looking around about a 25-to-1 risk to reward. Now, of course, you're not always going to capture trades like this that we've gone through in this video. Most of the times, we're looking around about a 5-to-1, 10-to-1 risk to reward. So when we do capture these types of trades, it's important that we take off these partials as the market moves down. If you're not taking these partials, then you're not trading successfully. So in today's video, I'm going to be sharing with you a live trade I've taken, actually 2 trades I've taken on the New Zealand USD, exactly where I've taken those trades and why I'm targeting these areas of supply. As I said in the intro, we're going to go through a live trade now on the New Zealand USD. I've taken 2 trades, one off this 1 hour area of demand, and then we'll go down to a lower time frame to see where I've called that second position. So first, let's look at the overall pair. We've been in an uptrend on the 4 hour time frame. We can also notice that we broke these highs, we came back, retested it, and we come back again to retest it again. So we are in a bullish state. Let's go to the weekly time frame. We zoom in, we can see that the weekly has this area of supply. So we have tested an area of supply. That's why I'm not looking for long-term bullish bias at the moment. And also if we go over to the monthly time frame, we also have this area here on the chart, which is a monthly area of supply, which we're inside as well. So being very careful and cautious, taking a trade inside supply. I don't normally suggest doing this, but I have the experience. I know what I'm looking for in a trade, and this is why I've taken it. So we go down to the 1 hour time frame. Let's go through why I've taken this entry. We can see we had this low in the market. We had these lows, and then the market dropped to downside, breaking all those lows with a false break. We rallied up, pulled back, created a new high. The market's pulled back into an area where you'll be able to see in a moment, an area of demand. This is an area of demand that was created. The markets then come back into this demand zone here, and then we call a trade up to this area of supply. It's as simple as that. It's not difficult to understand supply and demand. Then after that, what do we have? We create new highs as the market rallies up. We pull back into another new area of 1 hour demand where I've caught my entry. You can see that I've got 2 trades on the go. First entry has come off the 50% of this bearish candle in the 1 hour. That's my first entry with the stop loss at these lows. I've then got a target for these 2 trades. Got one target at this last area of supply created where we've seen the bounce back down. I'm then seeing this double top being occurred after this push up. So I'm looking for a price to break through that, go up into this area of supply for that second position. Now this is not what perhaps will happen, but it's what I'm looking to happen. I may well adjust things as I see the way the market moves. So let's go down to the 15-minute time frame where I took this second entry. Now on the second entry here, you can see where the market's come back down into this area of demand on the 1 hour. We then create this, let me just go closer into price so we can see this better. So we then create this area here, these double 2 candles, and then the market drops through, rallies back up, breaks these highs. That's giving me what? A new area of demand in the market. We create this area of demand, and then what I've done, I've taken an entry at the 50% area. So then you can see when the market comes up here, it comes back straight to that 50% area of that candlestick, and we've rallied up, and I've taken some profits off this trade already, and then I'll be looking for the market to continue higher. So that is in a nutshell these 2 trades that I'm currently in on this pair, one on the 15-minute time frame, the other is on that 1 hour time frame. I will be moving those to break even very shortly, and I'll be looking to cover off any loss on these pairs as I'm already in a AUDUSD buy as well. So what I'll do now, I will come back and update this live trade review once price does unfold itself, whether it comes back and stops me out. One of those trades I've already taken profits off the 15-minute time frame, so I cannot lose anything on that trade now, even if it comes back and stops me out. But I may well look to move to break even soon if I see price continue to show me this pattern to the upside on those lower time frames. So an update since I last went through this couple of trades I was in on the New Zealand USD. Unfortunately, the lower time frame entry that I took was stopped out at break even, and the first trade I'm in, I've taken some profits. I've actually halved off the trade. You can see I've now halved the profits. Price coming to this bearish candle, and I've taken some profits off right here in the market. So I've cashed a good sum off this trade, and I'm still looking for my final target, this area of supply on that 1 hour time frame. Now the previous trade where you saw me take an entry on a 50-minute entry, that I was looking for a target, this area of supply, and it was this first trade that I'm in is where I was looking for this area of supply to take off my final target. Now this trade, hopefully, as we can see the big strong move up, will hit this final target today, and hopefully we'll come back and update it once it does. So a very short time has passed since we last updated this trade. As you can see, it's now hit that final target, came straight in at those previous highs, and it's been a successful trade. Now the entry has just been triggered off this demand zone. We've just triggered the trade at the open of that candle, and what I'm looking for, this is giving me a good potential setup of this area of demand to go back to the upside. Now we have seen in the previous markets, this pair has been continued to go up every time we've seen that pull back. So that's why I'm looking for a buy trade on this occasion today. And also if we go to those higher time frames, we have movement back up to previous areas of supply on the weekly. And also if we go to a monthly time frame, we also have room to this monthly area of supply as well. So that's what I'm looking for at the moment for this pair to continue higher. As I've said, I've just been entered into this trade. So I'm going to pause the video here and come back at a later point, and we'll go through this trade setup in more depth to see exactly what has happened, whether we've come back to hit that target or if the trade has in fact been a full loss. 8 hours has now passed since entering this buy trade on the pound USD. As you can see, the market has responded with a nice bounce coming off this area of demand where I was looking for the market to head higher. Now I've come back into this previous bounce where we see the market where we had that double test, then we've dropped through into this demand zone. When I've seen the market just come up and close above that area, I've also taken off half the position off this trade and moved to break even. So now I'm actually taking profits out of the trade. I'm now going to let the trade just unfold. Whether it comes back, stops me out of break even, or if it continues up to hit that final target, I've now made a nice profit on this trade. And that's what it's all about when you're trading with supply and demand and understanding the way those banks move the markets. We want to be in and out, taking our profits, so at the end of the week, we end up with a nice profitable week. So what I'm going to do, I'm going to let this trade continue to unfold, let it hopefully continue high up to this final target, where we're then going to come into, just before coming into this area of 4-hour supply, where we may well see any kind of reversal back to the downside off that area of supply. This will be a nice looking pullback into that supply. So I'll be looking very closely for any sells. And I will update it if I look and actually find a nice sell here. But we could also just see a break to the upside, removing these highs. Because as I said, in the previous section, we have room to go higher into those areas of supply and those higher time frames. Now, mainly that weekly, we have more room. But we did have a previous high. Let me get a line. We had this previous high here in the market. And what I'm seeing is that bounce here, and we had that nice push up with that false break, which has created this zone, and the market has dropped to the downside. Now if we go to a 1 hour quickly, you'll be able to see that zone better with the breakout. So we had this high here, this high here was broken, and you can see we created this nice indecision candle which creates that breakout, and then the market has fallen away. We can even see that drop as I removed all these areas here where we had a build up of orders when the market was pushed up that one last bullish candle to the upside, and we dropped down. So this is why it's a great area. Potentially we could be looking at a 50% of that last bullish candle to the upside, where we could be looking for a sell trade to go back down. But again, as I said, I will update this trade review once I hopefully hit this final target and then what I'm looking for next on this pair. So the final update on this pound US dollar buy trade. Let's go through exactly what's now happening and see the market, which bounced off this area of demand where I was looking for that trade, has now gone up into this area of supply. The trade is now being closed at a full profit, and we're now going to be looking for any sell trades off this area of supply for the market to go back down to this area of demand. So now this area of demand has played off already. We're going to remove this demand zone, and what we're going to look for is the market to come back down, removing this area in the market to break these lows back into this area of demand, where once again we may look for a potential long to the upside. Now remember, when we're looking for a trade, we must always do the top-down analysis. Looking back in price from current area, we look down to the left. Now what we need to do is from this area, we're looking for an area of demand. So let's look at price here. We see price rally up, pulls back, rallies up. So we're making those higher highs and higher lows. When it pulls back again and rallies up again, then we're going to create another area of demand. When we're creating demand zones as price makes those new highs in the market. And that is what we're looking to mark off. Now the area of demand we're going to mark off is this bullish candle here. We're going to mark the low and then we're going to mark the open price of the bearish candle next to it. So that is our area of weekly demand. And as you can see, price has now just come into that demand zone. Now I'm not suggesting I'm looking for a big move up from here, but I am looking for a reversal on the lower time frame to catch a quick buy trade. Price may well continue to fall through, but it's all about putting the odds in your favor when you understand the higher time frame analysis. So remember, always do your top-down analysis. So let's go down to a 4-hour time frame. Now the 4-hour time frame is where I've picked up this reversal to occur. Now this is going to demonstrate to you a false break with a reversal. Now look at the way the market came down and it found those lows in the market. We hadn't actually gone into that weekly demand. We were going sideways and then we've pushed into the weekly demand. Let's just go closer into this chart. Let's actually zoom in. Right, so now we can see where the market was here. We've then dropped into the market nicely. Then we've pulled back and we see we've started to chop sideways. Now what we're looking for is the market to show me the false break. Now this is that low and these are the lows here. We see the market eventually breaking back down with this bearish candle and then we break back up with this bullish candle. And as soon as this bullish candle is closed, that is where I'm starting to look for reversal on the lower time frames. Remember, we're doing our top-down analysis. We're going from a weekly inside this weekly demand. I've then seen the false break on this candlestick back up. I then know that the potential for this market to go back up is definitely in my favor. Now look at the target. My target is these previous highs and these previous lows, where the market's most logically going to go to before we see the market reverse back down, or if it's going to continue to go higher. So let's go to the actual entry time frame now, where I've taken the entry, and that was on the 15-minute time frame. Now let me just zoom out on this one. So we're inside, let's just show you where that area is. So we're inside this area of demand still, so we're definitely looking for buys, we're not looking for sells. What we then have is when the market comes down, we have the market coming out. Let's just show you we need a trend line. So we have this trend line to the downside. That trend line gets broken right here. We pull back and we rally out. A nice strong rally. Once we've seen that rally out, we can then mark off these previous highs where we're looking for the market to come back to. And right there, we retest it with an engulfing candle to the upside. And that's where I've taken my entry. And you can see the market's already gone up. I've taken profits of these previous highs. I'm now at break even already. And I'm looking for the market to continue up. Now remember, the market's moving at fractal nature. And we could very well see the market now pull back to here before we continue up. Now this candlestick on its own, this big bullish candle, is going to have areas where there's demand in it as well. So there is potential of demand heading higher. Remember, even though the markets may not come back to an area of demand that you have, and currently from this area we have an area of demand here, we have an area of demand here, and now the market's just gone higher, we have an area of demand here. On the lower time frames, you're going to find demand zones as well on the lower time frames, remember. So that sometimes you have to remember, the lower time frames will have those areas as well. Now this entry hasn't come off an area of demand, it's come off an area of structure in the market. So basically it's a breakout, pullback, retest with a candlestick pattern. You're not always going to capture those trades with using a supply and demand zone. Now based on this, you could have looked at this trend line's been broken. In fact, you could have actually drawn a trend line here, and then you could have looked at this as an area of demand. which you could have caught an entry as well right there. But for me, I wouldn't have taken this trade because I didn't see the false break occurring on that 4-hour time frame until this move went up, and that's why I waited for this entry. If you're trying to take this type of trade down here, you're trying to take it too soon, and that's why you're having a lot of losses. It's all about having patience in this game. If you don't have the patience, that's when you will get into problems with your trading. So it's basically as simple as that. It's a breakout retest. Now, many price action traders at support and resistance would have been watching this area for a trade as well. So you have the added influence of those traders looking for it. Let's go to a 30-minute time frame and a 1-hour time frame. We can see where the market on a 1-hour time frame made this small area where we can actually draw out. Let me just draw this zone. We can have a zone here of demand on the 1 hour, and that actually comes back and tests that 1 hour zone, and then we rally away. So if you was watching this at the time, I didn't catch it. I actually took this trade off my mobile phone. Again, just to realize how easy it is to understand price. You can trade it off any platform. You don't have to be on a PC to take a trade. You can do this off your mobile phone. But there was a perfect entry using a structure. And I didn't catch that because I missed that trade. But the next best thing was to look for the entry on the 15-minute with that price action signal bouncing off this area. But there was a perfect trade here with an area of demand to capture that entry and look at the potential profits you could have had. And again, that's a good entry because we have the 4 hours showing us this false break as the market goes back up and we pull back to it. So let's go through this entry, why I've taken this setup. But first, yesterday's entry I took on this pair, which came right off this area on the chart, where I took a 15-minute entry and got my profit, these highs. Now this is the second chance entry. That was the first entry. Now what I'm looking for now is after that first entry, I was looking for the market to rally away and then pull back to that same area. Let me just demonstrate exactly what I mean. We have these previous lows in the market and we have this low here as well. And look at the candle, which when we broke through to downside, that nice bearish candle. And this is where the banks are going to sell the market first, taking out all those stops of these lows and then rallying the market back up. Now look what we have where the price went to. We have those same highs. So that's an area where the market has found some areas to take some more trades off and they've sold the market back down. But as we see the manipulation happening, we want to now look for the market to come back to then grab another buy off this area of demand. And that's exactly what I've now done. Now, as well as this demand zone, I'm going to go through an area where that trade was yesterday quickly on the 1 hour area of demand, how that could have been taken. And also, we have the round number of the 127.00. Now, that is an important big round number. And that's also why we're seeing this reversal happening at that level. That's where we see the banks, institutions looking at that main level where they set their orders. So once the market rallied away, I'll go to the 1 hour time frame and you'll be able to see where the market rallied away. So we had the drop through this big high spread bar to downside. Then after that high spread bar, you'll be able to see what I now look for when I look for a trade. We have a small body candle followed by the rejection candle, loss of momentum. Again, we have some small candles, indecision in the market, and finally we break to the upside. We then pull back and we rally away. Now, once I see this rally up to the upside like that, that's where you can draw this area of supply on the 1 hour, where I've drawn it, and that's where the entry was triggered, and we see the market rallied away. Now, that wasn't the entry I took yesterday. I actually took a price action entry, which is based off a 15-minute engulfing candlestick coming off that area because I missed this entry. But it was a perfect area of market structure with a reversal candle. And where I took my target on that trade was also these previous highs. Now that's an obvious target to look for. Look at the way the market rallied up that big upper wick. It was a one big bullish candle and then it dropped straight back down. And that is trapping in more people to the upside. So now there's loads of people in pain because they are in buy trades here, thinking the market was going to rocket up, and now basically now negative. The market's now coming back down, and this is where we see the banks have sold the market. They've then pushed the market up, and now the market's come back. We're going to see hopefully going to see a nice big rally to the upside. And this is where all these people who are now stuck in this trade from buying up on this big candle are going to close at break even. Now they do that because they're in pain at the minute. They are in this trade. Their current is negative and they just want to see the market come back so they can get out with a zero loss. But what we're going to see is that the entry I've now taken as the markets come back to this area, we're going to see the false break to the downside, probably in the next 15 minutes when the US market opens, and then we're going to see that push to the upside. Then as the market comes back up, we're going to have all these people who are already in a buy, they're going to exit their trade, and then we may well see the market just drop a bit and then rally higher again. So the banks basically have sold the market and then they've bought the market up. They've then brought the market back down to exit this sell where they've falsely broke to downside, capturing again people into the sell. And what that's going to make is also when the market comes back down to my entry where we see now, everybody who's sold on the break to downside, they're now also trapped down here in a sell position. And that's why when we see the market coming back down, we're going to see the market skyrocket back up. Because all these people who have sold, and they're going to get out break even, buying back their positions. So hopefully in the next half an hour or so, I'll be able to go through this video just to demonstrate to you the power of understanding the markets. To show you what's happening, go on the 15-minute. And on the 15-minute chart, what are we seeing? We're seeing price hovering around in a very, very choppy market, up and down, inside this box area, sitting right at this main big round number. So what I really want to see now is a push down to capture more sellers into the market, and then I want to see the market rally away, and then perhaps even pull back for one last test, and then we see the push higher. So there's an opportunity here to even capture a lower time frame entry. Now if I see this, I will be taking this trade, and you'll see that as well in the next part of this video. So it's now been about a day since I've been in this trade. We can see that the market has rallied up nicely as I was suggesting what I was looking for price to do. Now to finish off this video, I just want to go through the lower time frames of what I was showing you with price, what I was expecting for price to do with that false break. But we're on the 15-minute time frame. Let's just go back in time. This is the area we were watching where price had that tight range. We had a small breakout here. It's nothing massive. We do have this low in the market right here. So it was coming up those previous lows as well. But then we can see what happened. The market is pushed higher. Now, what do you think this is going to do? This is going to trap people who are seeing this tight range. They're going to buy here. And then what do? They push the market down, taking all those stops, what's sitting below this area, and then they finally push the market up. Now, that is exactly what I said I was expecting to happen. Understanding the way the markets move, remember, using the top-down analysis with that area of monthly demand we were coming into, and then obviously we went to the weekly. We had the weekly area of demand as well, this area of demand. Understanding candlesticks, we have a big drop in, then we have a loss of momentum with an indecision candle. That is setting it up for a reason to look for a trade. That's why I went through this trade and I caught that first entry, what I said about in the beginning of this video, and now this second entry on the retest. Now it did come very, very close, in fact, to my stop. That's why you need to make sure your stop is below that low with a few pips so you don't get trapped in that market as it pushes down. So I hope this video has given you some great insight to how I trade the markets and how it's possible for anybody to trade using these same concepts. Now I'm looking for this market just to continue up now to these previous highs. Now whether it does it this week or if it does it next week, then that's what we're looking for to happen. I am actually looking closely at this pair right now. If we go to the 1 hour time frame and shrink the chart down, we can see where the market has now come up. We had this previous area. We've now broken out of that area. So what I'm looking for now is if the market perhaps is going to come back, retest this area again for an area of demand and rally back up. So there's a potential area for another trade. If we go down to the 30-minute or even the 15-minute, you'll be able to see we've got these areas here. We've got a rally, base, rally. Again, there's potential for another trade long. We are making these higher highs, higher lows, and I'm looking for that to continue up now to that target. So once you've taken a trade from down here, you can continue to look for trades. Or if you've missed this first trade and you realize you've missed it, then why not start looking for extra trades? Now that is simple when you understand the way the markets move. Here we have an area of demand. We have another area of demand. And look what happened as price rallies up. We pull back. We rally up, we pull back into demand. That is how the markets move. That is how I trade the markets. Now in today's video, we're going to go through a live trade I've taken on the New Zealand USD. Now this trade is based off a 1 hour entry using that false breakout. But before we can do that, we need to understand where the market is going, so you can make sure you're going with those higher time frames. So to start off, we're on the daily time frame of New Zealand USD. We can see by looking at the chart that this pair is in a bullish trend. It's been in a long-term bullish trend to the upside. Now that's obvious to see. We have come into areas on the higher time frames. Now what I was looking for is a reaction coming off this area of demand, which we had a pullback into it and we rallied away. Now since then, I've noticed a pattern on the 1 hour time frame. So I'm going to go to the 1 hour time frame now. Notice how the market has created these highs in the market where the market has been able to break to the upside. Now I've got an area of supply where I was waiting for the market to come back into to see a reaction. Now it hasn't come up to that area, and that's why I like the look of the way the market has formed these highs for another potential false breakout. If I see the market come up here, false break these highs and then drops away, that's a perfect time for me to look to sell off this area of supply. But on this trade setup, I've gone for a bullish entry. Now long term, we are bullish. And what I saw on this area was, again, what did we have? We had some equal lows in the market, and then we had a nice big reversal candle to downside, showing me that false break with the momentum push higher. Now that is going to show you that the banks are in control in this market. And what I'm looking for then is the market come back into this area of demand. This big push down was that area of demand where the market's rallied out and it's now pulled back in. Now what I've done here, I've taken an entry off the 50% of that candle. Now I mean by the body of this candle, I've caught an entry of the 50% area of that candle with my stop at the low of that candle. What I'm looking for is a short-term buy back up to those previous highs where I may well see that false break again back into this area of supply and then perhaps a push lower. Now it's all about going with higher time frames, and again back to daily, long term we have been bullish. I've seen a bounce off that daily area. If we're back to 4 hour, we can see this 4 hour tested that daily zone and came into this area on a 4 hour time frame. And once again, we can even see a area where we saw the break to downside, rally back up, showing you a false break on the 4 hour time frame. And let me just delete everything off the chart And I'll just show you what happened here. This created this area of demand where the market rallied up, pulled back into, and again we've then rallied back out. Now as the market's rallied back out, we've created this break of where this high in the market, creating another new area of demand right here, and guess where the market came back into? It came off that demand zone. So everything ties up. We had this false break here coming back into this area of demand before the rally away, and now we've pulled back again to a new area of demand on that 1 hour. I'm still looking for this area of supply to hold for the market to break up, and that's where I've taken this 1 hour entry. Now I've caught the entry at the beginning of my entry, so you can see that I've actually pulled the trigger right now and taken entry of 50% of this bearish candle, where I'm seeing the market being sold off, that false break and the momentum pushed to the upside. So it's been quite a few hours since I took this trade and we went through the entry. The entry was when I posted it, is around here, and I just triggered into this trade. Now let's go through what actually has happened so far so you can see how you need to really place your stop loss in the correct placement so you're not stopped out prematurely. Now when I entered into this trade, I was looking for the market to rally back up to these highs. Now I'm still in this trade. You can see it's now starting to work out. But before it actually went up from here, we saw another push lower. Now we failed to break the low of this zone. But the point I'm trying to make is if I didn't have my stop placed in the right placement, then I would have been stopped out. And the market's now rallied up, removed this high, which in turn has created this area of demand where the market's then come back into, and we've seen another rally higher. So if you missed this first entry based off this area of demand, there was another entry to be taken here on the reversal of that 1 hour time frame. Now the trade is hopefully going to head up to these previous highs where, like I said at the beginning of this video, I was looking forward to break this area to go into this area of supply to watch for any sell trades. Now this is showing you the power of understanding the markets when we have everything lining up. So it's been quite a few hours since the last update on this trade. Now it is now actually Monday afternoon, and I'm going to go through the 1 hour time frame in a moment. As you can see, the trade has hit the final target, these previous highs, and we are now looking like we're heading into this area of supply. Now, am I looking for a sell trade here? Still could potentially be a sell out of this area of supply. It's a good area to watch for a move back down, but we do have limited space to the downside. Let's have a look at the higher time frame. Now on the higher time frame, it's looking bullish to go back to the upside again, so we're going to have to watch very closely. Let's zoom in to price. Now if you look at where the market has come off this area, we didn't break this low. So the last area of supply is actually here on the daily. So potentially going back up into this area of supply and this 4 hour supply zone is going to be a good area to watch for a bounce. So that is what I'm looking for now. Let's go to the actual trade off the 1 hour time frame. Now the final target was at this, just before hitting these previous highs. You can see that is now being achieved after we had this pullback on Monday morning. And now we're having this afternoon a nice move back up to hit that final target. Now it's a very, very strong move up. Now that is telling me after we see this strong move up is that the banks are in control of the market. Right now, I'm not convinced to sell yet. I need to see what happens when it comes into this higher time frame area of supply. And I'm going to need to see that the banks come in and sell that market off. If they don't, then I'm not going to be convinced to look for any sell trades yet. But this trade has ended up being a great trade with a great profit. Let's go to 1 hour time frame so we can see a bigger picture of what I was looking for. What we had this area of 1 hour demand. As you can see, this area of demand, we created these lows in the market. We then made a false break into that area of demand, and then we rallied away. Now, the false break will give you that opportunity to understand where the banks are going to manipulate price to get those orders. So basically what we have this false break has occurred, it's dropped down. I'm then looking for the market to show me a break of these highs. That has happened here. The market's rallied up. this is then going to create this new area of 1 hour demand. So let's go closer into this zone on the chart and we'll have a closer look. So we're on that area on the chart now where this area of demand was created. Once this high was removed on this bullish candle, I've then drawn out this area of demand. And it's a great area to watch for a pullback into this zone for buy. Now, I did have an entry sitting here. I had my entry sitting inside on this area of demand, stop at the low, but I never got triggered into the trade, unfortunately. So what I've then done, I've qualified an entry using a price action signal on a 5-minute time frame. Now let's go down to that 5-minute time frame in a moment, but first I want to just go through my targets on this one. Now I've already taken off profit on this trade. I'm risk free, so even if it comes back and stops me out, I'm not lost anything on this trade. But what I'm potentially looking for is the market to go back up to these highs first. I want to see the market either show me a small rejection and then break through with a strong solid candle. This is going to tell me the market will continue higher and I will move the trade to break even. Now once this has happened, I'm then going to be looking for the next target. We're going down, let's go back. You'll see the next target I'm looking for is going to be up to these previous highs in the market where I'm expecting price to go to. Okay, so that's what I'm looking for the long term of this trade. So let's now go down to the 5-minute time frame to show you that entry using the price action signal, how to use a combination of the supply and demand technique that I teach within my courses and how you can use a price action signal. Let's go down now to that 5-minute time frame. So on the 5-minute time frame, this is what we had. We had this area on this trend line where we had the market building these orders up to the upside, and then we've seen the push straight through those lows and this low back into this area of demand. As you can see, the market spiked it, we've rallied away, and we've pulled back. Now, what does that create? That's created an area of demand now on the lower time frame. So this is an area of demand created on that lower 5-minute time frame. So potentially this was an entry on itself for buy from here to the upside. But what I wanted to do, I wanted to confirm that with a price action signal. And in fact, if you look at this candlestick, this at one point was one big bearish candle. Now, how many of you would have seen that bearish candle and you'd taken an entry here on this area of demand and would have panicked and closed the trade out? This is what a lot of traders do. They allow their emotions to take control of their trading. So what actually I waited for here was that signal to occur. And what do we have? A great looking rejection candle. In fact, it's a pin engulfing candle of the previous bearish candle. And that's where I've caught my entry, must stop at the low of the move and up price goes. So if price can now head up to that final target, the final target I'm looking for is in fact, I believe around about 8 to 1. Let's just mark this out. Let's now go to a 1 hour time frame. It's just over an 8 to 1 profit on this trade. So if this market can head up there, that's what I'm looking for on this trade. So what I'll do now, I'll pause the video here. I'll come back at a later point so you can see exactly how this trade has ended up. So a few hours have passed since we were going through this entry I took. As I was saying, I wanted to see price show me the break of these highs in the market so I can then move this trade to break even. That's what I'm now going to do. Just wanted to show you the update on this trade. And I'm going to continue now to look for the market to push up to that final target where these previous highs sit. And what I'll do is I'll pause the video again now and I'll come back again once this trade does finally hit that final target, or if we see the market reverse and drop back down. But for now, what I'm going to do is move this trade to break even, so I cannot lose anything on this trade now. And if I see the market continue to make the pullbacks, so if we see the market pull back, continue higher, I'll then move the stop below those pullbacks. So it's now been about a day since we went through this buy trade. Now since then we've had the market pull back. So we had the entry coming from here on that 5-minute time frame. We've rallied to the upside, breaking these highs, creating a new area of 1 hour demand, and the market's now pulled back where you'll see in a moment where I've taken another 5-minute entry. Now on this first position, you'll notice that my lot size has now been halved, and that's because I took off some profit on this trade. I'm going to show you exactly where I took that profit. The actual profit I took off this area was based at this area on the chart. As the market came up to this area, it's where I cashed out a good sum of this trade. As you can see, it did go slightly higher, and then we've pulled back to this new area. So my target is still sitting here. I have lowered the target slightly to go in with a current area of 15-minute supply. I'll show you that in a moment as well. Now the new entry, as you can see, has come off this 1 hour area. So we have this nice 1 hour drop down, then we see the rally to the upside. That's that area of supply, and I've qualified it with a 5-minute entry. So let's go down to the 5-minute entry to have a look at that. So this is where we can see the market has made these lows. We've dropped through that false breakout, rallied to the upside, and we've pulled back into this area of demand on the 5-minute. Now that's exactly how you can just go through your charts, find those setups and take those trades. I then watched it and we created this nice bullish response off this area of demand. So I've then taken an instant buy, stop at the low, and we can see since the market is rallied up. And this is where my final target is sitting. So this trade's just over a 2-to-1 risk to reward. It's only a short-term trade to take during today. Go to the 1 hour, you can see this area, we have this last up candle before the down mode. That's where I'm looking to take profit on that trade. And back to the 5-minute. So I'm going to bring this trade to break even, risk-free on that trade, and hopefully that can go up in the next hour so we hit that final target. I'm also going to lock in if this high is broken today. I'm going to bring up this trade, what's left, and we'll lock in that on those lows. So now we have a couple of trades on the go now on this pair of the AUDUSD. And again, this target, I'm just going to show you why I've changed my target. I did have the target these previous highs, but after I've seen this lower high form, this pullback, I've decided now to change my target just slightly. And I'll go to the 15-minute chart so you can see exactly where that is sitting. Notice here we have this last bullish candle before the drop to the downside, removing these lows here. We have this nice area of supply. Now, for one, this is going to be a great area of supply to watch for any sell positions. If there's anything there that looks like it's setting up to me, and it's a great way to look to take a target. So that's where I've got that final target sitting on this buy trade. So hopefully we can see those trades both hitting those final targets, and I'll come back and up the trade at a later date once they hopefully have hit those targets. So I'm going to do the final update now on this buy trade. Now, first off, I want to go through that second position that I opened. Unfortunately, I went to break even and I was stopped out on this spike down on that 1 hour candle over the evening. So I got stopped out at break even. But the second position, you can see I've got some profit locked in. We are now just about to hit that final target on that 15-minute I went through on the previous section of this video, showing you that area of 15-minute supply. Hopefully we can see that actually trigger this final target in a moment in this video. We are very, very close to this final target. I'm probably now going to close this trade out, as I'm now going to close my charting software back down. As you can see, this has ended up being a great trade to have taken. Actually, let's start with a weekly time frame, because the weekly time frame we have seen the market pull back into this area of demand. We can see the market has in fact rallied higher, removing this high. That's created this area of demand on the weekly. We've continued up and we've now pulled back into that demand zone. Now the market did make this rally-based rally area, which has been removed, so we do have an area of supply sitting here, and as you can see, my target on this trade is going to be below that supply zone. That's important to notice how the market is already sitting. Now if we could drop down to a daily time frame, again on a daily we have this previous area of demand where we can now see the market has dropped into, which is confluence with that weekly area. We have this nested area of daily demand inside that weekly zone. We've seen a nice strong rally back out, and if you take note of these candlesticks on the way back down, look at the way the candles are indecision candles with the lower wicks being rejected. That's showing you that the buyers are here waiting to push the market back up. Now, where we're looking for the market to go back up to, we have this area of supply. Again, you can see my target is coming in way before this area of supply. Now, that is based off a 4-hour target. This is a 4-hour entry. Now, popping down to the 4-hour time frame, you're going to see the actual entry that I'm taking. Now, the entry is coming off a previous area of 4-hour demand. There's that demand zone. You can see I'm looking for the market to now pull back into that demand zone with a set and forget entry style, and looking for the market to go back up to this area on the chart. Now, it may well find that these previous highs will hold price up, but eventually I'm looking for the market to break through, coming to these previous lows and back up into that area on the daily and the weekly areas of supply. Now, what I want to show you is this entry, why I'm taking it. We have these previous lows, and now we're seeing the market showing me the rejections, and now we're having that break to downside. I want to see a nice solid break, a nice bearish candle closing through to downside before it then goes into my area of demand, and then hopefully we can see that rally back out. Now, that is the manipulation going on within this market, and that is what I'm now looking to happen. Now, if I don't get triggered on this 4-hour entry, I may well go down to the 1-hour time frame, and I'll be watching this area on the 1 hour. And if I see a bullish response now going up, removing this high in the market, creating a new area of demand, then I'll be looking for a pullback to buy off this area on the 1-hour demand or move higher. All depends on what I see. I've already got my 4-hour zone set up, ready to take the trade. If it doesn't trigger and I see a reversal happen before that triggers, then I'll be looking for 1-hour entry. So as you can see, I've now been entered on that bearish candle when we went through the first section of this video at this area of 4-hour demand. It's triggered me into the trade. We've then had another test once again. In fact, this is another pattern that we can see right here in the market, where we're seeing this false breakout to downside into this area of demand, and then we're seeing the market hopefully now continuing up to break the upside. I'm going to quickly go down to this lower time frame just to show you exactly what I mean in that false breakout. So we go down to a 15-minute chart, and you're going to be able to see where we have these previous lows in the market. And what has happened is the market's bounced off these areas, and then we've had a nice push through into this area of demand on the 15-minute. Now I'm looking for the market to rally out, removing this high in the market. That's going to confirm this reversal on this lower time frame, and again it's going to show me that my entry that I've taken on the 4-hour is valid. So what I'm going to do again, I'm going to pause this video here. I'll be coming back once the market continues higher on that 4-hour time frame, and I'm going to show you when I move this trade to break even. Okay, so as you can see, it's been a few hours since this last update, and now we have a nice big bullish reaction to the upside. Now the entry has come off as went through that area of demand sitting here. The target is at these previous lows, just above this area on the market. I will be watching the market now as it comes up to these previous highs. I may even take some off this trade right there, and I'm going to be moving this trade now to break even. This remains my final target unless I see a reversal off these previous highs to the downside. Then I will update this trade to show you will I actually exit this position. So this trade has worked out very well off that area of demand, and if we go down to a 15-minute time frame, we can see that same pattern where we had the market breaking to the downside. We rallied out, removing those highs. That created the area of demand right here, where the market then came back, respected it, and then we've seen the rally to the upside. This works on a fractal nature. Once you understand the way the markets move with the use of supply and demand, it's going to be easy to find these trades. So now I'm going to move this trade to break even, and that'll be a risk-free trade. And as I said, I will most probably take some of my trade off now, this area on the chart, and then I will let the remainder hit this final target, or if I see the reversal, I will exit early. So I have actually now taken profit off this trade at these previous highs, as the market can back up into those highs once again. You can see my position on the lot size. I've halved that position now, taking a good lump off this trade. Now I'm going to watch this market very, very closely to see if this is a reversal back down from these previous highs. I don't want to let the market continue to fall off from here and I give back all that profit. So I'll be watching now to exit this trade early if I see a reason to exit this trade. This could just be a retracement on the lower time frames. We have seen this previous lows being removed with a big drop to downside. This could be that manipulation again before we see the move higher. But if I see the market continue to drop lower, starting to show me new pullbacks continue lower, then I'm going to perhaps look to exit this trade early. The main part of this trade has been achieved, hitting that first target at those previous highs. Some may say, well, why have I got my target sitting here? Well, this is based on a strategy where I look to take profits in the market as well as a simple area of a previous high. So I am looking for the market to continue up and hit that final target. Again, if it doesn't, I've taken a good lump off this trade. What I'm going to do, I'm going to pause the video once again and then we'll come back and update this if I decide to move my stop to lock in some more profit, or if I exit this trade early, or if we see the market reverse back up and it does hit that final target. So the final update on this trade, I have actually closed the final half of this trade out on the close of this bearish candle on the 4-hour time frame. What I was seeing was the lower time frames were demonstrating the removal of demand zones, creating areas of supply, which we'll go through in a moment why I actually closed that trade. Now we are coming into this area of demand. We are having a reaction. We could now see another push up into those previous highs, and this time we could see a removal of that high. So I go down to the lower time frames and have a look. But before I do that, this is that area of demand where I took the trade from. As you can see, the first half of the trade was this much profit from risk to reward, and this was the second half of the trade of my risk to reward. So let's just remove everything off the chart. I'm now going to go down to that 15-minute time frame. Now, the reason why I decided to exit that trade is we had this area of demand was removed on this push down. I was looking for that manipulation to go high and it didn't happen. And then we created a new area of supply as the market went lower. And that was basically as this candlestick here closed down. As we pulled back up, I decided to close that trade out. So that is the final update on this trade. I hope you've enjoyed this trade review on the EURUSD. I hope it's helped you with how I look to take my trades. And remember, if you're not already subscribed to my YouTube channel, then why not take the time to like this video right now, subscribe to my YouTube channel, and don't forget to hit that bell notification button, because then you'll be notified of the next video I release. In today's video, I'm going to be sharing with you a live trade that I've taken on the AUDUSD pair. I'm recording this trade a little bit late. I'm already in the trade and I've already hit my first target, which has put me into a risk-free trade, but I still thought it would be a good trade to go through with you so you can understand exactly the power of understanding supply and demand. So let's go through this trade setup. Now, what we're looking at first, we can see this area of demand, which is created from the daily time frame. What the market's done, we've seen that push away and we've pulled back into this area. Now, if you haven't seen that false breakout video, you need to watch that video. I'll leave the video at the end of this video, so make sure you watch it all the way through to the end. But what we did have here is a false break of this trend line to the downside on this area here. We see the markets drop down into this smaller area of demand. We have now come into this area of demand. You can see we've spiked in. Now what I want to do now is go down to a lower time frame where I can go through the entry I've taken based off a 1-hour time frame. You see, I find my zones on the daily. I make sure it's a good zone to take a trade by confirming that zone. Then I'll go down to my lower time frames where I'm going to qualify it for a better risk to reward on my trade. Now you can see this is a large zone. Now if I was taking an entry off this zone and I've been entered into the market now, this is going to be a 1-to-1. This area here, before I even get a profit, that's at my 1-to-1. That's just too big a zone. Now look at the size of my risk compared to my gain. That is the sort of risk to reward that you want to be looking for. And it's by going down to these lower time frames, this is how you're going to do it. So let's go down to 1 hour time frame. Now on the 1 hour time frame, let's actually shrink this chart down so you can see what's actually happened. So before we came into this larger area of demand, this is the demand zone level. You can see we've pushed down with this big bearish candle. Now before that happened, what did we create? Again, we've created this area of structure in the market where we've seen the buyers come off once. We tried to push it again, and then we saw this big breakout candle to the downside, which is that false break, removing all those stops and coming into that daily area of demand. We've then seen the rally away, removing what a last area of supply on a lower time frame. This is an area of supply that's been removed, confirming that this is an area to look for a buy off. Now, unfortunately, that is a big candle, and I'm not going to look to take a trade off here because that's too big of a risk. So what did I do on this occasion? What I've done, and let's zoom in. So what I've actually done on this occasion, I've gone off a 50% of this bearish candle. So I've gone for a 50% entry and placed my stop at the low of that candle. That's what I've basically done on this trade. I've now been entered into the trade overnight. That's a reason why I'm late coming in this trade to you. This happened while I was sleeping. The market's dropped into my entry. Now, basically, this is a set and forget entry type of style of trading. And if you haven't seen the videos on the set and forget strategy, I'll leave a link above now so you can watch that video as well. Now, what happens is once the market's entered in, we can see it's rallied away. I've already hit my first target. I'm not going to go into too much detail on where I've taken my target today on the first target because that's more I share within my advanced courses, and it's not really fair on my students to release that here on YouTube. But basically, I'm now risk-free on this trade, and even if the market comes back all the way through and stops me out, I will not lose anything on this trade. In fact, I will still end up with a small profit because my first target was bigger than my risk. So what am I looking for next? I'm looking for the market to continue up to this area where I'm looking for my final target. Now, how much is that going to be on a risk to reward? Let's have a look. We're going to use my Fibonacci tool. And we can see that we've got just over 6-to-1 risk to reward on that last portion of the trade. So it's understanding the way you're going to look for those trades with a daily time frame, then coming down to lower time frame, looking for your opportunity for an entry. Now we do also have, in line with this target, is an area of supply where the market broke this trend line. So that could potentially be an ideal area to watch for any sell trades as well. So that is the entry on the AUDUSD. What I'm going to do now, I'm going to pause this video and we'll come back at a later point, most probably next week now because it's a Friday today. And we'll see how this trade has ended up, whether we see the continuation up and we hit that full target or if the market actually drops off and stops me out. But I will be a break-even trade. Now, of course, if I see the market on the lower time frame continue higher to making me these higher highs, higher lows situation, then I may well look to start locking in profit as well. So a brief update on this buy trade on the AUDUSD. As you can see, this morning we had another pullback and we had a nice rally to the upside. So this trade is well and truly now broken those highs. So I'm most probably now going to move this trade to break even to protect the account. And we're looking for the market to continue up to this previous target set at these highs here in the market. So what I'll do now, I'm going to pause the video again and we'll come back once this trade unfolds at a later date. So it's been quite a few hours since the last update on this trade. As we can see, it's now actually Monday afternoon. And we had a pullback during the beginning of the open of this market this week. And then we've just seen a nice push higher from this area. Now that is now going into an area of supply, where I did say about watching that area for any reversals. And it's come into that target perfectly just before that area of supply as well. So I'm really pleased with the way this trade has worked out. Now in today's trade review, we're going to go through the EURUSD entry I've just taken. I'm going to do some top-down analysis first just to understand my actual higher time frame perspective. And then we'll go down to the entry I've taken off a 1 hour candle. Now this is basically off a candlestick pattern using a 1 hour for my entry. So we'll go down to that in a moment. moment, so keep watching to see the actual entry, and then we'll go through where I'm actually targeting. Now, this isn't a target I've got placed, it's a long-term perspective that I may well look to target. I'm actually visually going to exit this trade once I see a reason to exit this trade. So let's now go to a daily time frame. So let's go closer into the daily time frame. Now, what am I looking for here? Well, what I see is this previous lows in the market where we had a bounce, and then we broke through. Now, where did we break through into? Well, if you wasn't watching my weekly analysis, you wouldn't have known, but it's broke down into this area of demand that we were watching for an entry. So we had a false break to downside. Now, since that false break, we've seen a powerful move back up, showing to me that false break has been confirmed. And now we've had a pullback where I'm now looking for a long trade again to the upside. Now, as you can see, I've currently got my target, these previous highs, where I'm looking for a great risk to reward on this trade. I will go through that at a later point once this trade unfolds, exactly why I'm looking to target that trade. So make sure you watch the rest of this video so you understand why I'm looking at these types of targets. So let's go to the entry, but first, before we do that, what this has created for me is this area of demand. So the market has not only pulled into this area of 4-hour demand, but we also pulled back into this bigger area, which is an area of daily demand. So remember, the higher the time frame, the more power a trade is going to have. And what I'm looking for is this area you're going to see in a moment on the 4 hours, a potential false break to the downside is going to act as a possible reversal, which may go back down. I'm going to be watching this area very closely just to make sure that the direction of the market doesn't reverse from there and we see a good break to the upside with the continuation of this trade. Now remember, Forex trading comes with risk. So unless you really understand the risks in Forex trading, then I do suggest to get financial advice before you start trading. Everything in my channel is for pure education only. I'm not an expert in the field when it comes to financial. I'm not giving you financial advice. So please remember to get your own advice before you start trading. There are many rewards in Forex, but also there are greater risks if you don't know what you're doing. So what am I looking for here for an entry? Let's now go down to a 4 hour. One, we have a nice Fibonacci retracement coming into the 61.8 right here, right at this area of 4 hour demand. This area of demand, a Fibonacci retracement, was perfect for a setup to go long. Now, I haven't just taken a set and forget entry because the way the market came down, we were very, very bearish. I needed to see a reaction, and I got that reaction off this area. And what I've done today, I've taken a price action entry off a 1 hour time frame. Now, many times you will see me qualify a trade, but sometimes I don't have the time. So what I'll do, I'll just take an entry off a single candlestick pattern when it shows me the proof that the buyers have stepped into this market. Now let's look at this 4 hour area. We have these previous highs in the market, then we have a 1 candle break up with a big bearish candle to downside. That is what I was talking about, that false break video. Remember, if you watch it at the end of this video, keep watching to the end, then watch that video because it's going to help you to really understand how I'm showing you these trades at the moment. So let's now go down to the 1 hour time frame. Now, again, as I said, I've taken a 1 hour entry off this, but there are many different ways you could take a trade. I will go through that in a moment. So keep watching to see other ways you could take a trade on this one. So looking at this, when the market came into this area of demand, what do we see? Well, we have an area here where the market has been built up before it broke through into this area of demand. So that's showing me that there was a pause, there was some stops sitting below these areas, and in fact there was stops here as well, most probably, and even this low in the market. The market's been run down, remove those stops, and then you'll see we had a nice engulfing structure, or pin engulfing in fact, and that's where I've taken my entry, and we can see the market's going bullish. That's exactly where I've caught this trade. Let's go closer into price. Now you can see the structure I'm talking about now is this bullish candle. That's where I've pulled the trigger, taken an entry on that bullish candle. I'm looking for a continuation. So where am I looking to target? Well, potentially I do believe that we could see the market going up to this area, just before that area, perhaps this area of supply, which is going to be a great area to take some off this trade. Remember, never let a winning trade become a loser. Now, it doesn't mean even if the trade turns into a break-even trade. You're not being successful if you're allowing trades that are in good profit to turn back down and to just be a break-even trade. You need to be taking profits of your trade. So this was probably going to be my first target today. And we're looking to take some profit at this area. Then I'm going to see how the market reacts if it gets up to this area of supply. If it can break that area of supply, then long term, I'm going for this area up here on the daily time frame. So if you was not using a one candle entry, which is this engulfing candlestick pattern, how else could you look to take a trade? Well, something I teach within my courses is about qualifying zones. Went down to a 5-minute time frame now. This area in the market, when we drop in to this area, we have again a false break to downside, and this creates for me a nice area of demand. And this is where, if you was watching the charts, you can see there's an entry right here to being caught. Very, very small stop loss. This would be my stop. And now my first target would have been taken at the previous highs, and I'll be in a risk-free trade with all this profit. Now, unfortunately, you can't always be at the charts to do this. So I wasn't going to be at the charts, so I went for the 1 hour candle once I saw that candle. And of course, I've already seen this setup that I missed, so I went for an instant entry on the 1 hour time frame. But there are ways to understand you can qualify a zone and take a good trade. Now, all of that is taught within my course. So once again, if you want to progress as a supply and demand trader, then you need to look at taking that course. So what I'm going to do now, I'm going to pause this video right here. We've gone on for quite a while, and I'm going to come back and we'll go through this trade once I either hit that first profit target, or if we actually turn back down and I have a full stop loss. We'll come back and update this trade at a later point. So a few hours have now passed, and as you can see, the market's come straight into these previous lows, right where I said I'll be looking to take some off this trade, and that's exactly what I've now done. I've taken half off this trade, and that's ended up being a very nice profit. So it's just under 2 to 1 profit on that first position. Now what I'm going to do, I'm going to move this trade to break even to protect my account. And this now means whatever happens, I'm going to end up with a profit out of this trade. And I'll be watching to see what happens now if the market can come back up to this area of supply to see whether we're going to see a reversal at this area of supply on the 4 hour time frame, which is this area, or if I can see continuation up to these previous highs here to the left with a good risk to reward left on this trade. So what I'm going to do again, I'm going to pause this video and we'll come back and update this trade once it continues to unfold. So as you can see, the market has continued to go higher in our favour on this trade. We go to the 1 hour time frame. Entry that's come off that engulfing structure, we've seen a continuation to the upside, a nice push up, and we've now come into that 4 hour, just about coming into that 4 hour area of supply, where we may see a bounce back down from this false breakout setup. So what I'm going to be looking for now is any reversal price action here to look to actually sell this market, but I'm also going to now take off some more off this trade. I'm going to take some more profit off this area right now on the chart, and then let this trade unfold and see if we can continue up to that final target, or if we actually get a reversal to go lower. Now remember, we want to be taking those profits off our trades as it continues to go in our favour. There's no point allowing that market to reverse on you and then you give back all that profit you made. So we already captured some profit at these previous lows. I'm now going to take some more profit off at this area on the chart, and then I'll be looking for that final target. So what I'm going to pause this video once again, and then we'll come back and we'll update the end of this trade. So today is Monday morning, and I've now actually been stopped out on this trade as I trailed my stop last night. There was a potential reversal coming off this area of supply that I mentioned. Now that has actually happened. We're seeing the market dropping back to downside. Unfortunately, the way the market was presenting this on a Friday evening, and that was not the best time to take a trade for me, so I'm not in this trade. But let's go through where I've actually exited this trade. As we've seen the market continue to make these higher highs, and the pullbacks on the way up. The last area I saw where potentially the market may well come back into was this area right here. It's now pulled back into. I've been stopped out as I trailed my stop to that area, but potentially this trade has still been a great trade. Now I will be watching for any signs of any more bullishness back to the upside. If I see it, I may well enter, but this was the best potential area to take that sell trade at the moment. So this trade, even though it's been stopped out break even, has still worked out really well. The first target, these previous lows, and the second target, this area of supply, and I've been stopped out on that final position on this trade. So I'm really happy with the way this trade has progressed. And again, remember, if you want to learn the same concepts that you've learned within this video, if you're not already subscribed to the channel, you're new today, why not take the time to like my video if you've enjoyed the content, subscribe to the channel, and then also hit that notification bell. Then you'll be notified on the next time I release another video. And of course, there is the weekly supply and demand analysis if you're all about supply and demand.